The International Monetary Fund, the IMF, has downgraded its economic growth forecast for Nigeria in 2025 to 3% and 2.7% in 2026, owing to declining oil prices. And will this country surpass the growth forecast? Tilewa Adebajo, CEO of the CFG Advisory, joins me now for more on this and outcomes from the IMF Article 4 consultation with Nigeria. Thank you, Tilewa. It's a pleasure to have you with us on the show today. Let's start with the growth forecast that's been downgraded to 3%. Previously, it was 3.2%. Let's start with your reaction to that.
Well, let us take a look at the context in terms of this economic outlook, or the global economic outlook review that the IMF is taking into consideration. Post-COVID, I think the global economy was hit by inflationary pressures. And within the last 2 years, most of the global economies and emerging markets have been able to bring down their inflation, as seen with the Fed, that took inflation down from 8% to about a 2% targets. And I think the trend over the last couple of years has been most of the central banks have been cutting their rates in order to stimulate growth. I think this has been the pattern. But unfortunately, with the new Trump administration, the expectation was that the global economy was going to go through a growth phase, having tamed inflation. But with the tariffs that Donald Trump has put in place now, it's caused a big disruption within the global economic systems. And of course, everybody's revising their growth forecast. In Nigeria, for instance, I think the reason that the IMF is giving is because of declining oil prices, which is quite surprising for me, because oil only contributes less than 10% to Nigeria's GDP. Our oil and gas sector is recovering and actually grew by 10% last year. So we've seen declining investment in the oil and gas industry from a high of $25 billion a year to about $3 billion, $4 billion last year. So we're looking for a recovery in that sector right here with the reforms that have taken place. So I think the Nigerian oil and gas industry is positioned for growth. So there's a contradiction in that. But having said that, even taking a look at the revised growth numbers for Nigeria, which is 3%, and the government is looking at a forecast of about 4.6%. Those growth numbers are significantly under the radar in terms of what Nigeria needs. Nigeria's population is 200 million. And our population is growing by about 3% per annum. So Nigeria needs a sustainable growth of between 8 to 10% for us to see significant development and to bring a lot of people out of poverty and to restore purchasing power, because we're still struggling with stagflation. Right. If we're talking about growth.
And that was one of the things that the IMF did also bring up. You know, it acknowledged the efforts of the CBN, acknowledged the efforts of the fiscal authorities, especially around, taking out subsidies and, all the other reforms. But they pointed to the fact that the benefits, the impact there's still a bit of a lag in that respect, especially food inflation, insecurity issues in the food belt, etc. But for this report as a whole, how should the fiscal authorities respond to this? Is this because
I wouldn't really pay much attention.
Should I just say, oh, okay, right, let's, think.
I wouldn't really pay much attention to this report because as far as I'm concerned, it doesn't reflect the realities in Nigeria. I think what the fiscal authorities and what the monetary authorities in Nigeria need to do is that they need to begin to put out policies that will grow the economy. We've gone beyond, I think we've seen some level of stability, and we need to improve on that stability. And more importantly, we need to build on growth. It is entrepreneurs that will grow the economy, not government. Government needs to put in the right policies so that we can take a look at and understand where the next set of investments that are going to drive growth, employment, and opportunity in Nigeria. That is really where we are now. Because we need to manage the exchange rates. I believe the exchange rate is still too high at about 1.6. My own projections from fundamentals is that the exchange rates should be sub 1,000 quite easily, and we're heading towards some sort of price discovery. There's still some distortions in the foreign exchange markets, but I think overall we have that stability that we need. So what is important now is that we need to put in the trade policies, We need to adjust our investment policies. We need to adjust our industrial policies that will spur entrepreneurs and business people to make investments that will grow the economy.
And are you seeing any of that, any green shoots in that area? Because I know, I mean, from the Ministry of Industry, Trade and Investment, there has been talk about, of course, boosting trade and also encouraging domestic investors within the country also through policies. But are you seeing anything in that regard that shows you, that tells you that, right, we're on the right path, we're doing something towards that?
Well, I think one of the most fundamental shifts that I've seen right now is the fact that in Ogun State in Nigeria, they have a special processing zone next to their airport. They've built a new agro-airport, and a group called Arise are making a significant investment in that area. And they've also started that project recently. These are the sort of multi-billion-dollar projects to support the airport infrastructure in Ogun State that we need to begin to see. So the Arise group is well known in Africa for projects they're doing. And the fact that they have the confidence to replicate this in Ogun State, I think, is a positive development.
Right.
So we need to see more of that. And we understand now that Dangote is also building a deep sea port in Olokola. We have the LNG project, Train 7, which is due for completion by the end of this year or early next year. So we need to get LNG to announce Train 8 and take a look at other LNG projects, preferably in Brass and Olokola. So these are the sort of investments that we need to see that will boost the economy in Nigeria.
Now, for the local entrepreneurs themselves, what is to be said about the environment? Because, you know, a lot of factors go into, for instance, credit issues. At what rate would our businesses borrowing credit? The policy environment, are they supportive of these businesses? I hear you, and you're correct when you say, obviously, we always say SMEs are the backbone, are the engine of any economy. But one also wonders, how much support are they receiving?
Well, unfortunately, because of the inflationary pressures in the system, interest rates have been raised up. And I think that is why it's important that the government should begin to check the fiscal side of things in terms of their borrowings and their balances to ensure that we can reduce inflation. Right. If we reduce inflation significantly to about 11% in Nigeria, we'll begin to see growths in the areas of 8 to 10%. I think statistically, with the data available, that has been proven. And as you've said, because when you have low inflation, not only do you have purchasing power on the right. consumer side from the households to spend, but then loans become cheaper for SMEs and other entrepreneurs to be able to expand their operations. So I think, of course, yes, that is a limitation at the moment, but let's hope it's temporary, and then we can get inflation under control.
Right. And for Nigeria's debt, you and I have had this conversation before. It's still at significant levels, but the communication from the fiscal authorities is that we still have it under control, both domestic and foreign debt. And as far as debt to GDP ratio is concerned, they're still at manageable levels. In your analysis, and I know you do a lot of research, do the numbers tell you that?
Yes, indeed, it is manageable, but
right.
it is not sustainable. And I think that the current rating from Fitch, which gave an upgrade to stable, I think buffers that position that there's no cause for alarm as far as the debt is concerned. But having said that, I think it's time for government to begin to optimize equity within their capital structure. The levels of debt, I think, are reaching what I would call the headrooms. I think our headrooms, we're hitting our headrooms. So it's now time for us to optimize equity within the capital structure of the balance sheet of the federal government of Nigeria. And I have been an advocate of the sale of JV assets to raise about $30 to $50 billion, which we should use to pay down some of this debt right. to a more manageable levels. And I think that's what we need to look at in terms of asset disposition, sale not only in the oil and gas sector, but in other sectors of the economy, concessionings and other things that will attract global infrastructure investments into Nigeria.
I know what we talk about, investments, FDI and all of that, but looking at the Nigerian economy as a whole in terms of from a diversification point of view, yes, we are seeing traction in the non-oil sector, but in terms of What are your thoughts in terms of how diversified the economy is? What else should we
be doing? The economy is very
doing?
diversified.
It is very diversified. But in terms of the revenue
like
generation...
I said, the oil sector only contributes 10% of Nigeria's GDP. And I think our tax profile, in terms of diversity of the local Nigerian economy, there is significant diversity.
I guess for me, from the point of view of, okay, it's diversified, but...
Exports is what you're talking about.
Right.
So what happens is the fact that the oil and gas tends to generate a disproportionately amount of
when it
foreign
comes to
exchange.
exports, right?
So the oil and gas, generates probably 85% of our foreign exchange. And I think that is really where the disproportionate numbers come through. But when it comes to the GDP of the country itself, the oil and gas sector is about 8% of our GDP.
All right, we'll leave it there, Tilewa. Thank you so much for talking to us today. We appreciate your time on the show, as always. Tilewa Adebajo, CEO of the CFG Advisory.